I'm the captain now.
Welcome to Captain Investing.
What's going on, investors? This is the Captain with the Captain Investing, and I'm back again with another video. I know it's been a week, just had a pretty busy week and had a lot of things going on, but I think I found an opportunity for you guys to make some good money in the next coming years with, we're going to be talking about AvePoint today, so let's go ahead and get into the presentation. As always, we're going to go over things that will be touched on. What exactly is AvePoint and what do they have to offer? Why you should trust Apex Technologies, which is the Spac company they'll be merging with. Comparable companies already on the market. Spacs beginning to make a big comeback. Pros versus cons, and final thoughts on this intriguing opportunity. Okay, so first let's start. Who exactly is AvePoint? They are a market-leading SaaS company, which is a software as a service, which is a $184 billion market. They offer 10 different solutions for businesses ranging from migration, management, and cloud records. They're an easily scalable, cloud-delivered model that can meet the requirements of government, financial services, pharma, high-tech, retail, and education. This company was founded in 2001 as a backup solution for Microsoft Exchange. Shortly after, however, they begin to focus on a new Microsoft product known as SharePoint 2001. They have been partnered with Microsoft for the last 20 years. Why you should trust Apex Technologies. They are the largest technologies groups within Goldman Sachs. Their team has executed over 200 tech IPOs and over 100 merger acquisition transactions. Big time players that they have helped come to market include Microsoft, Oracle, and Twilio. And the performance speaks for itself with companies like Booking Holdings increasing its market cap 80 times since coming to the market. And the CEO has served on over 200 boards over the last 8 years. Okay, here we have some companies that are comparable to AvePoint. We have Alteryx, which has a stock price of $119. Avalara, which has a stock price of $169. HubSpot Inc., which has a stock price of $396. Ring Central Inc. has a stock price of $292. And Five9 Inc. has a stock price of $151. And these are all cloud service companies. Okay, so on this one, I put Spacs are making a comeback. Over the last couple weeks, Spacs have made a triumphant return with big green candle days. All these returns are going to be in the last 2 weeks. As you know, Spacs for about the last month and a half prior to the last 2 weeks, Spacs were something that a lot of people were leaving. A lot of Spacs that came out were just staying neutral or just kind of trading sideways or going down. But as of late, I think the interest in Spacs has begun to pick back up. As you can see, Switchback is up 119% over the last 2 weeks. SRAC's up 27%. CIIG is up 134%. LGVW is up 69%, and RMG is up 67%. So I think people have their eyes on Spacs again. Pros versus con. I have cloud services have and will continue to become a bigger part in most companies. This pandemic has opened the eyes for more awareness that working from home can be an option. And what makes that easier is cloud networking. They have a 30% year-over-year annual reoccurring revenue. And the sheer amount of companies that they have already worked with on some basis now is pretty impressive. And I'm going to go ahead and exit this real quick. If you just look at this list of companies they currently work with, you have some of the top names: NBC, Disney, ESPN, Bridgestone, Hershey's, Honda, you name it. Progressive, Bank of America, HP, the U.S. Treasury Department, and Department of State. So getting back into it over here. Some of the cons that I see: cloud services field has become crowded as of late. There's 212 listed companies on the NASDAQ. Expect more from a company that has been around since 2001. The reason I say that is this company's been around for 20 years, and the revenue to me just doesn't speak volumes for a company that's been around that long. Day traders will be targeting SPACs, which may result in big swings in stock price. I say that because the eyes are back on SPACs now, and people see easy money. So you might see gigantic swings, going up $3 or $4, and then people dumping to take profits. If you're a long-term investor, though, that shouldn't be a problem. So my final thoughts on the company. This company being with Microsoft for the last 20 years shows the trust they have in their products and services. The leadership from AvePoint and Apex are top-notch players. Apex has produced winners, and with AvePoint you have a founder that has stayed with the company and is the CEO of the company since founding it 20 years ago, so that's pretty encouraging. Cloud computing services are expected to grow rapidly over the coming years, actually leading into a market that's going to be worth billions of dollars. I believe this company has a bright future, and by bright I mean you could see 5x within the next 2 years from current stock prices. And on Monday I'll be looking to take a position in the company depending on how price action looks pre-market. I think anything under $14 for a long-term hold is going to be a great pickup, including warrants. I haven't looked at the warrant pricing, but for a long-term play with a company like this, warrants could turn into something that make you a ton of money. And real quick, I just want to back out of here and take a look at the stock price. Once it was named that they'd be merging with AvePoint, the stock jumped up 29% in one day. That shows you the kind of interest people have in this company. Okay, then final slide. As always, invest in your own DD and understanding of a stock. I am not a financial advisor. Please feel free to subscribe or leave a comment or leave a question in the comments. And I hope everybody makes a ton of money. And for more content, just subscribe. In the comments, just suggest the next stock you want me to take a look at and give my thoughts on. And as always, guys, I appreciate it. Take it easy.